I know everyone's talking about getting rich quick with the next big crypto or meme stock, but let's be real. Building lasting wealth takes time, strategy, and the right systems in place. If Valuable Finance started investing in 2025, this is exactly what is recommended to do to build wealth, avoid debt, beat inflation, and never stress about retirement again. We're talking about a holistic plan that covers everything from budgeting to tax optimization, so you can achieve true financial freedom. This isn't just about making money. It's about building a life where money is no longer a source of stress, but a tool to achieve your dreams. So, let's dive in. First things first, you absolutely need a budget. I don't care if you're making $50,000 a year or $500,000 a year, you need to know where your money is going. Think of your budget like the foundation of your financial house. Without it, everything crumbles. Now, I'm not talking about some restrictive, no fun allowed budget. I'm talking about a plan that helps you track your income and expenses so you can make informed decisions about your money. For example, if you're earning $3,500 a month after taxes, allocate a good chunk, let's say 20%, to savings and investments. That's $700 right off the bat. From there, you can break it down further. Maybe $350 goes towards a Roth IRA, and the other $350 goes towards a high-yield savings account. There are tons of great budgeting apps out there that make this super easy, like Mint, YNAB, or EveryDollar. These tools help you categorize your spending, set financial goals, and even track your net worth over time. Trust me, getting a handle on your cash flow is the most important step you can take on your journey to financial freedom. Listen, you can't build wealth with a credit card sucking the life out of your finances. High-interest debt is like a financial anchor, dragging you down and preventing you from reaching your full potential. So, how do you tackle it? The debt avalanche method is my go-to. Here's how it works. You list out all your debts from highest interest rate to lowest. Then you focus all your energy on paying down that top debt as quickly as possible while making minimum payments on everything else. For example, let's say you have a $7,000 credit card balance with a 22% APR. That's a whopping $1,540 in interest alone every single year. That's money that could be working for you in the market, growing exponentially over time. Once that first debt is gone, you move down the list, attacking the next highest interest rate debt with the same intensity. It's like a snowball effect, gaining momentum as you go. Okay, before you even think about investing, you need to protect yourself from life's inevitable curveballs. Because trust me, they will happen. Your car will break down, you might have an unexpected medical bill, or you could even face a job loss. That's where your emergency fund comes in. This is 3 to 6 months worth of living expenses saved in a safe, liquid account. I'm talking about your rent or mortgage, groceries, utilities, transportation, all the essentials. So if your monthly expenses are around $2,000, your emergency fund should be between $6,000 and $12,000. Where should you keep this money? A high-yield savings account is perfect. You'll earn a decent interest rate and your money is FDIC insured, so it's safe and sound. Plus, there are no monthly fees to worry about. Having this financial safety net will give you peace of mind and prevent you from going into debt when unexpected expenses pop up. Now for the fun part, investing. In 2025, I'd start with 2 powerful investment vehicles, a Roth IRA and an HSA. First up, the Roth IRA. This is a retirement account that lets you invest after-tax dollars and withdraw your earnings completely tax-free in retirement. That's right, no taxes on your gains. Then there's the HSA, or Health Savings Account. This is like a triple tax advantage. Your contributions are tax-deductible, your money grows tax-free, and you can withdraw it tax-free for qualified medical expenses. Let's say you invest $500 a month in a Roth IRA starting at age 30. Assuming an 8% average annual return, you'd have over $360,000 by the time you're 55. That's the power of compound interest. Investing doesn't have to be complicated or risky. In fact, I'd automate the entire process using low-cost index funds. Index funds are like baskets of stocks that track a specific market index, like the S&P 500. They offer instant diversification and typically have much lower fees than actively managed funds. For example, let's say you invest just $200 per week into the Vanguard S&P 500 ETF, or VOO. Starting in 2025, over 20 years, you'd have over $400,000, assuming the same 8% average annual return. The beauty of automation is that you're consistently investing, regardless of market fluctuations. You're taking advantage of dollar-cost averaging, buying more shares when prices are low and fewer shares when prices are high. Platforms like Fidelity, Vanguard, and Charles Schwab make it incredibly easy to set up automatic investments into index funds. You can literally open an account and start investing in minutes. Who doesn't love the idea of making money while you sleep? That's the beauty of passive income. It's about creating multiple streams of income that don't require your constant attention. One way to generate passive income is through dividend-paying ETFs. These are exchange-traded funds that invest in companies known for paying out dividends to their shareholders. Another option is REITs, or real estate investment trusts. These allow you to invest in real estate without actually owning physical property. You're essentially buying shares of a company that owns and manages income-producing real estate, like shopping malls or apartment buildings. And then there's peer-to-peer lending, where you lend money to borrowers through online platforms, earning interest payments in return. The key is to diversify your passive income streams, so you're not relying on just one source. What's the point of building wealth if one accident or lawsuit can wipe it all out? That's why protecting your assets is crucial. First and foremost, get term life insurance, especially if you have dependents. This will provide financial security for your loved ones in case something happens to you. Next, consider an umbrella liability policy. This provides an extra layer of protection beyond your auto or homeowner's insurance, shielding you from major financial losses in case of a lawsuit. On the tax front, look into Roth conversion strategies. This involves converting a portion of your traditional IRA or 401k to a Roth IRA, allowing your money to grow tax-free in retirement. And don't forget about tax loss harvesting. This strategy involves selling losing investments to offset capital gains, reducing your overall tax liability. Without a destination in mind, your money will wander aimlessly. That's why setting clear financial goals is crucial. Start with short-term goals, like saving $5,000 for a down payment on a car or paying off a specific credit card within 6 months. Then move on to mid-term goals, like buying your dream home in 5 years or starting your own business. Finally, establish long-term goals, like retiring comfortably by 50 with $1 million in the bank or traveling the world without financial worries. The key is to make your goals smart, specific, measurable, achievable, relevant, and time-bound. The best investment you can make in 2025? In yourself. Specifically, in your financial education. Knowledge is power, especially when it comes to your money. The more you understand about personal finance, the better equipped you'll be to make smart decisions that build lasting wealth. Make it a habit to read at least one financial book per month. There are tons of incredible resources out there, from classics like Rich Dad, Poor Dad, to newer releases like The Psychology of Money. Watch educational YouTube videos like this one, listen to financial podcasts, and follow reputable financial experts online. And don't underestimate the power of financial tracking tools. Apps like Personal Capital provide a comprehensive dashboard to monitor your net worth, track your investments, and analyze your cash flow. Remember, financial literacy is an ongoing journey, not a destination. The more you learn, the more confident and in control of your financial future you'll become. There you have it, Valuable Finance Exact Plan to Build Wealth starting in 2025. Remember, it's not about getting rich quick. It's about making smart, strategic decisions that set you up for long-term financial success. If you got value today, give this video a like, subscribe for more smart money moves, and share this with someone who's ready to stop living paycheck to paycheck. What's your #1 financial goal for 2025? Let's inspire each other in the comments. Remember to save, invest, and protect to build wealth for life.